It's not happening. That's fine. That's fine. It's all good.
Can we work on that?
It's all good.
All right, listen, one of the things we want to talk a little bit about is the fixed income world, because we've seen the U.S. government debt market decline since mid-September on expectations that President-elect Donald Trump's policies will boost growth and rekindle inflation. So we continue to see, I think it's safe to say in 2024, the narrative around fixed income kind of evolve. We've got a great voice on this.
Yeah, Manju Baraya is portfolio manager and head of systematic edge fixed income and custom SMA investments at Allspring Global Investments.
It's a big title.
It is a big title.
Does that fit on a business card?
Is there an acronym?
You got to turn over for the second half of title, right?
That's true. We got to shorten that a bit, actually.
Well, look, I mean, you are responsible for overseeing all active, factor-based, and enhanced passive fixed income capabilities and solution.
Right.
Joining us here at Schwab Impact, what's the conversation that's happening right now around fixed income, given that we have an election result,
right,
but it's kind of unclear what's going to happen in terms of government spending and also the collection of money from the government or by the government?
Yeah, I think in terms of policy, right? So let's talk about what's in store for 2025.
Do you feel like you have, like, transparency around it?
Not really.
Okay. As you set your forecast out.
No, I don't think any of us have a crystal ball.
What's your best shot?
That's my best shot. So let's think about the policy that's actually been outlined for 2025, right? So there's going to be deregulation coming forward, right? So I don't know how much deregulation and where. The second is around tariffs. So, potentially tariffs, right? And then the third one is tax cuts, right? So tax cuts for corporations or wealthy individuals. So when you put it all three together, they're essentially inflationary in nature. So I think what's in store for us, I would say there's policy uncertainty, right? Policy uncertainty definitely translates to more volatility across the different asset classes. And then also, if all three or one of the three is enacted, I think there's potential inflation pressures that's going to actually creep in. So
less moves by the Fed then?
I don't know, potentially a pause, right? So for
pause December or pause next year?
Potentially a pause in December.
Really?
If you think about what Chairman Paul has been talking about, right? So the recent rhetoric that came out of him was essentially that he said that we will have to obviously be data-driven, but he said that the rates at this point, the policy rates, are in line with the expectations. So if there is sideways moment in inflation, if you don't see that creep down, another notch down in the next month or so, potentially a pause. But if you look at the Fed fund futures, it's actually pricing in 50% probability. So we'll see what the data says, right?
We get more inflation reads before the December meet, right? We still have some data, as you said.
Right, yeah. But what this translates to, in my view, is higher rates for longer. That's really what it really means for fixed income, right, for 2025.
So where do you find alpha then in the fixed income world? How do you do it? How do you find it?
Yeah, so if the rates are going to be higher or moving sideways, so I think there are kind of three pieces, right? So one is focus on income, right? So you got to essentially maximize your income by diversifying duration. So one way to do that is to really kind of position across the curve, not really position on one or two parts of the curve. So you can essentially ladder across the curve, right? Intermediate to long-term rates is where I think there is alpha, just because of the policy uncertainty.
3, 5?
I would say 5 to 15.
5 to 15.
5 to 15 or 5 to 20. Right?
Okay.
So because of the uncertainty in policy, I think there is going to be premium demanded by investors, so which means that the long-term rates are going to stay higher for longer. The other part is really bring in some international exposure, right? EM, international debt. So
where internationally? Duration. Internationally, it's a lot. Or are you just saying pick a basket?
I would say pick countries where there's divergence in monetary policy, right? So you essentially have some amount of divergence from a monetary policy perspective, and then look for quality, right? So I think look for assets where there is potential, fiscal stability, a balancing of the budget and things like that. So I think you got to pick wisely.
We got news last week that the money market funds have surpassed $7 trillion in assets.
Yeah.
Maybe it's good that I'm not in the job of managing money, because I thought that as rates moved lower, things would move out of the money market funds.
Right.
Well, how do you look at that $7 trillion and where it's going to go and when it's going to go?
Yeah, I mean, that's the $1 trillion question, right?
Or the $7 trillion question.
And should we assume it's going to go anywhere? Are people just going to be happy and comfortable?
But if rates go down, then they might not be happy.
Yeah, I mean, that's, again, assuming the rates actually will go down, right? So
There's a lot of people assuming in the
Right.
crypto and the equity markets that rates are going to go down.
Yeah, but if you look at the allocation to crypto or any of the alts, that's a small portion of the overall portfolio.
Yeah.
So I would say if the rates stay higher, right, north of 4%, I think people don't really think about reinvestment risk, right? People are worried about what they're going to make over the next 12 months, 24
What do you mean
months.
reinvestment risk?
So
Taking out, doing something else.
Exactly, yeah. So
Okay.
if you think about like why laddered strategies are really popular is because you don't have to worry about reinvestment risk.
Yeah.
So, and you can actually position for, you know, potential policy surprises. So I would say that's really the key question is what the Fed does in December, what the expectations is for the next year. After September FOMC, there were like 10 cuts priced in. And now it's down to 3.
And it could change again. Manju, 20 seconds. What's the question you think every investor should be asking themselves right now? Just quickly.
I would say, are they diversified enough? You know, do they have enough diversification in their portfolio? I think that's the key question.
All right, great stuff. Hey, thank you so much.
Thank you so much. Thanks for having me.
Work on that title, acronym. No, I'm just kidding.
We're going to shot in next year. Yeah.
Manju Barea joining us here, portfolio manager, head of systemic edge, fixed income and custom SMA investments at Allspring Global Investments. We talk to their team a lot. Always get some great insight. Coming up, you know what we're ticking down to?
NVIDIA earnings after the bell, 4:20. We drive to the close right after this. This is Bloomberg Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlotte. U.S. stocks are trading well off their session lows, with the Dow currently up 146 points now. S&Ps are lower by 2, and NASDAQ pares losses to 0.2%. The U.S. 10-year yield is now at 4.41%. Gold is higher by 17, oil in the red, and Bitcoin, that's higher by 2%. Among the main 11 S&P sectors, leaders were healthcare and energy. Consumer discretionary and tech were under pressure. And leaders to the upside in the Dow, UNH and Amgen, while NVIDIA fell 1.8% and led to the downside. After earnings, Target plunged 22%. And in the AI space, XAI is valued at $50 billion in the latest funding round. Wrapping things up, NVIDIA, Snowflake, and Palo Alto Networks are report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. We got you covered on those as those numbers drop. And one additional item to report, Archegos Capital Management founder Bill Wong ordered to spend 18 years in prison for fraud and market manipulation tied to the stunning 2021 collapse of his $36 billion family office, capping a case that riveted Wall Street. To hear live breaking news over your Bloomberg, type SQUAK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. We've got, about 20 minutes? Let's be right on the money. About
Are you on the money?
18 minutes
Okay.
to go until the closing bell. It's a big day, right? NVIDIA earnings. That's certainly our focus front and center. I'm looking at the trade. We're up near our highs of the session, but it's not an exciting market. It does feel like a little bit of a wait-and-see mode. You've got the NASDAQ lower. We just heard Charlie talk about it. S&P call it relatively flat, but we're just kind of waiting to see what kind of message does NVIDIA say about itself, about the AI trade, about the momentum trade.
I was listening to Norma Linda and Matt Miller. They were filling in for us back at
They did
Bloomberg
pretty well,
HQ.
didn't they?
They were awesome.
Yeah, don't get any ideas, guys.
But Nora was talking about how Bank of America came out with a note that said, sort of contextualizing how important NVIDIA is, putting it on par with like a Federal Reserve meeting, other economic data.
Yeah.
I mean, given its market cap of, $3 trillion, kind of makes sense, but we'll see what happens when they report today.
Trading options signals this is going to be the most important catalyst left this year. Let's see what Brian Vednick has to say. He's Chief Investment Officer at MJP Wealth Advisors, $1.2 billion in assets under management. You're normally on the East Coast. You're here on the West Coast with us. How are you?
Doing great. Great to see you guys.
So how often do your clients come in and say, so about that NVIDIA, about that AI trade, tell us what you hear?
Look, it comes up a lot because, that's been the driving force of the market over the last, 18 months or so predominantly. We start to see a little bit of a shift second half of the year and the broadening out of earnings, coming from areas outside of mega cap tech. But look, this is an innovative trend that's still going to play out over the next 5 to 7 years. And we look at NVIDIA tonight, investors really want to hear, is competition changing in that space? I think it's more about not necessarily the demand, but can NVIDIA deliver on supply? Because when you look at analyst estimates for revenue growth year over year of over 80%, and these valuation estimates on future growth, because people right now are overpaying for growth if you look at it from a traditional perspective. So if those future earnings reports are delivered, we're actually not overpaying for growth for NVIDIA.
Because they're delivering?
Exactly. But I think that the real issue, Carol, goes back to your question is, with the new generation of chips coming with Blackwell, right? We're starting to hear little rumors of, can they keep production up to meet demand?
Right.
And if those things start to show that there's an issue there, then that opens up competition to come in from AMD, Intel, other places. And then the other part I'll just add real quick is the tariff conversation. The policy pieces, this mosaic that we're all moving through as investors. Well, if you look at NVIDIA's business, depending on how that policies are impacted, they could have some negative impact from shipping coming back for some of their Asian-made products.
Right.
But then at the same point in time, you need to hear from them to say, well, that actually, could those tariffs even boost demand that could go to the Middle East? Which is something that's kind of interesting.
Wait, explain the logic there, the reasoning.
Well, because when you think about the things that have been said on the campaign trail from the Trump administration, they are creating a tariff regime that could be disproportional to different parts of the world. So if you're making something in Asia and you get hit with a significant tariff, that can change the pricing for your product that could impact demand. But then, are there areas of the world that would be outside of that?
Somebody else that benefits, right?
Right. And so could NVIDIA boost more demand of their products going to areas that are underserved, like in the Middle East, for example? So these are the things that investors want to hear about, which is why we're in this period of time where demand, expectations are high. The mosaic of these puzzle pieces need to play out a little bit more to kind of keep that sentiment going, I think, in the space. And that's why tonight is so critical.
Do you feel like we yet know what the risks are for 2025? New administration, new White House. We've seen President Trump there before, but I do think it's going to be a little bit different. We're seeing what his administration looks like. We know the policies he's interested in, but there's what you say on the campaign trail and then what you get done with the Congress. So do you feel like we understand clearly the risks to investors in 2025 yet?
So I'll be just overly transparent. No.
Well said.
I don't believe so. And just to be add a little bit more to that, I mean, anytime you tried to predict what Trump is going to do, just don't, because it always ends up being a different probability outcome. And I think the thing that investors are dealing with right now is this push and pull between an environment when earnings are expected to grow.
Right.
Tax policy probably will be extended that will benefit stocks and deregulation, that part of the discussion. That the Fed still wants to cut rates over time to normalize relative to where we're seeing inflation going in different parts of the economy. But then you have the other side of it. You don't know exactly how the votes are going to play out on certain policy decisions. You don't know definitively if some of these folks are going to be nominated and go through the Senate process with approval. So I think this mosaic and these puzzle pieces I keep talking about have to play out.
Right.
But the market will come back to fundamentals in a couple of months, Carol. That's really, I think, where it will go.
You mean like earnings and valuations and
consumer, those types of things.
Well, I have so many questions here. I'm wondering about
You got 2.5 minutes, buddy.
Well, I'm going to go fast. How do you view the market as being a check on President-elect Trump and his policies? We know he follows the S&P 500 so closely.
I think anything that helps to support messaging is important to the administration. So if the markets are moving in a certain direction, if we're still getting positive economic growth on a quarter-over-quarter basis, if we're not causing a labor shortage due to implementation of an immigration policy change.
Which would be very tough if you're going to overnight pull 11 million people out of this country, more or less.
Right. So these things, and you look at some of the people that have been put in some of these positions, they're better than maybe people that Trump had in Trump 1.0 in being communicators. So I think to your question, Tim, it definitely matters where some of these economic things go.
What would you say the tone is, or what you're hearing around here as you walk around and talk to people? Is there a common thread in terms of what people are talking about?
I think recognizing these uncertainties, the thread is a heightened awareness of risk management, making sure that you're not...
More so than a year ago?
I believe so, because I think we're in a totally different part of this unwinding of the unintended consequences of policy decisions that started back in 2020. And now we have another set of policy decisions that are coming out. But going back to your question, it's very hard to do a probability assessment around politics and what Congress is going to do.
Wait, you know what they're going to do.
Well, let's say Matt Gaetz gets confirmed as Attorney General. And is that a signal to you that senators will allow the Trump administration, will allow Trump to do whatever he wants? Can you extrapolate that from that?
I think it's fair to assume that there's a signal that there's more people in Congress that are more supportive of Trump now than his first administration. So that, yes, there could be pushing of the envelope in a certain direction. But I think going back to your earlier point, it's unlikely that policies will go to extremes because of the unintended consequences of how it's going to impact the economy. To me, that's the check. But it takes time for people to realize that as it plays out.
It's almost like you want to fast forward a year because you feel like things will settle in, we'll have a better feel of maybe what policies will actually make some changes. That's just kind of my gut feeling.
Well, I'm going to say the classic advisor thing or investor thing here before we go. This is the reason why you stay broadly diversified and you don't have all your money in just a few companies, right?
Check. Got it. Brian, thank you. Thanks for stopping by.
Thank you, guys.
Brian Fendick, President and Chief Investment Officer at MJP Wealth Advisors. Coming up, we're counting you down to the close, and we're counting you down to NVIDIA.
listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody. Carol Masser, Tim Stenivek, live in San Francisco, the Moscone Center, Schwab Impact. We've got lots more to come, certainly, from the event. Also going to cover NVIDIA earnings. We do have a headline, though, crossing. This has to do with one of the richest men in Asia.
Gautam Adani has been indicted by U.S. prosecutors on bribery charges. He's worth $85 billion, according to the Bloomberg Billionaires Index. And once again, the headline, U.S. prosecutors have indicted Gautam Adani on bribery charges.
And we should point out, there was a short seller attack that was last year. Hindenburg Research accusing it of the largest con in corporate history, talking about allegations.
Hindenburg's words.
Yes, Hindenburg's word, right. Allegations that they used a web of companies and tax havens to inflate their numbers and their revenues. But there has also, Bloomberg actually had figured out that U.S. prosecutors were also investigating whether an Adani entity was involved in some bribery, paying bribes to Indian officials in return for favorable treatment on a green energy project. So there's a lot of moving parts here, but again, a headline, at least when it comes to U.S. officials.
Yeah, we'll bring you updates as soon as we get them around that. Of course, NVIDIA reporting 420 is when we expect those numbers to cross. $3.5 trillion is the market cap of that company. We'll bring you those numbers as soon as we do get them.
Can I just say, I was looking at NVIDIA, and I'm like, how it goes back and forth with Apple, like being the largest market cap company? Yeah. And I think right now, it is once again, I think it's like $3.57 trillion for NVIDIA, 3.45 for Apple. So it is the world's largest market cap company, right?
It is.
This moves markets.
It does. Hey, I wanted to switch gears a little bit and talk about the most read story on the Bloomberg terminal in the last hour. A little bit of lighter fare.
Is Elon Musk in it?
Elon Musk is involved.
Surprise.
Elon Musk and Vivek Ramaswamy, President-elect Donald Trump's picks to lead the newly formed task force to review government spending, have said they're going to push for eliminating work-from-home policies for federal workers. It's an idea that could spark clashes between the new administration and government employee unions. Here's what they said in a Wall Street op-ed on Wednesday, quote, requiring federal employees to come to the office 5 days a week would result in a wave of voluntary terminations that we welcome. If federal employees don't want to show up, American taxpayers shouldn't pay them for the COVID-era privilege of staying home.
How many workers are working from home in the federal government?
Great question. I don't know. But here's the thing. Federal government workers, Carol, do not account for a big portion of government spending.
Okay.
It's Medicare.
It's the services that we all
Medicare,
get,
Medicaid,
right?
Social Security.
Yeah.
Those are the big services. I think David Rubenstein said on another program that if you were to fire every government employee, it would account for about 15% of the federal budget.
Okay.
If you had no federal employee, obviously you can't do that.
Right. You need a few people.
How do you cut $2 trillion from the federal budget by getting a handful of people? Social Security. Popular programs that politicians do not want to see cut.
I will say there are more than 2 million federal workers, over 400 agencies across the country. 80% of federal employees work outside of Washington. This is according to the Partnership for Public Service. What's interesting is, just like major cities, New York and elsewhere, Washington, D.C. certainly saw post-pandemic office vacancy rates remain high in economic activity in the city's downtown, plateauing at about 68% of pre-pandemic levels. That was a 2023 report from the Downtown D.C. Business Improvement District. So there is a big bid among all major cities. San Francisco, here we are, but home of where workers have always kind of been a lot more flexible, I think it's safe to say. But cities are kind of trying to bring themselves back post-pandemic.
Yeah, I would normally share an anecdote about what San Francisco is like right now, but haven't been outside because
he's so mad
because the rain is just pouring. I did on my walk over from the hotel though see 4 Waymo vehicles driving without cars, and that was like a 2-block walk. Driving without people.
Little sunshine. We're going to see whether or not NVIDIA brings some sunshine when it comes to its results and the expectations. The stock was down about 3% at its lows today, up about 0.4% at its highs. So a little bit of a range there, folks. It's down almost 1% as we head into earnings. Do not go anywhere. The close coming your way right here on Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:58 on Wall Street. We do check markets all day long here at Bloomberg. Minutes away from the closing bell. We've got stocks right now with the S&P trading lower. The Dow is higher. After earlier losses, NASDAQ is down 30 right now ahead of the close, down by 0.2%. S&P lower by 2, has been swinging between gains and losses into the closing bell. The Dow up 126 now, up by 0.3%. The 10-year 4.41%. The 2-year right now 4.31%. Spot gold up 17 for gold. That is a gain of just about 0.6%. West Texas Intermediate crude down 0.7%, 68.87 a barrel. Bitcoin at a record 94,212, up now by 2.1%. The big event coming up after the close of trading will be earnings from NVIDIA. NVIDIA shares ahead of the report, down 1%. Kim Cahy is with Bouquet Capital Partners.
Now, the problem with the valuation on NVIDIA is it's already had a triple, a double, everything. It's as if it's a quarter being tossed and coming up heads, heads, heads. There is a day it's going to come up tails, and momentum investors are going to freak out. And with every earnings call now that we have, that day gets closer. Is it today? I don't think so, but I don't know.
Indeed, heads or tails, that is the question. 4:20 Wall Street time is when we find out for sure. Again, NVIDIA lower today by 0.9%. And there you have it. It's a wrap for a Wednesday, NVIDIA Wednesday. U.S. stocks with the S&P down less than 0.1%. Dow Industrials up 132, up 0.3%. NASDAQ at the closing bell down by 0.1%. Again, your 10-year 4.41%, the 2-year 4.3%. Again, we're on NVIDIA Watch. The second we get those headlines, we will break the news right here on Bloomberg Radio. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we are continuing here on Bloomberg Business Week. Carol Master along with Tim Stenevec. We're live at Schwab Impact in San Francisco, the Moscone Center. More conversations to come in just a moment. Dana Dioria sitting down with us, Co-Chief Investment Officer at Envestnet, really in terms of support, services, products for the investment advisory world. So I'm curious what she's going to have to say. What are you looking at?
The S&P 500, a rare orange day when you type in WEI on the Bloomberg terminal. It's not red, it's not green, it's orange. Because the S&P 500 was unchanged today.
It's kind of one of those days.
0.00%.
It's almost like, Tim, we're waiting for something.
Yeah, T-minus 19 minutes. Okay, how's that?
Oh, NVIDIA.
Yeah.
Yeah, as soon as they break at 4:20 p.m. Wall Street time, a number that Matt Miller loves very much so.
Makes sense.
Yeah, it does indeed. Anyway, we're going to break down those results. We're going to talk with Dana in just a moment. We've also got David Botzett, Head of Innovation and Stewardship over at Schwab. ETF investing, they had a new ETF, I believe, come out in the last week or so. They are always thinking about new items in the space, so we're going to get into that. And then, folks, we are going to be all in on NVIDIA results, looking at it from different perspectives and watching that trade after the release.
Yeah, we'll be joined by Kunjan Sabani over at Bloomberg Intelligence. He's a senior semiconductor analyst. We also got our managing editor of tech and global cybersecurity, Lynn Dewan, joining us. Bloomberg Tech's co-host, Caroline Hyde, joining us as well. So we got a great roundtable on everything. And that's just, 3/5 of the folks who are joining us.
Exactly. All right, let's get to Dana Dioria. It's so sweet to have her actually here on site with us. We're often talking to her remotely. Dana is Co-Chief Investment Officer at Envestnet. They provide technology and services to the wealth and asset management. They've got more than $5.8 trillion in platform assets, more than 108,000 advisors, 16 of the 20 largest U.S. banks, 48 of the 50 largest wealth management and brokerage firms, more than 500 of the largest RIAs, thousands of companies as clients. She's all in, and I got to say their platform sees a lot, Tim.
Dana Dioria, good to see you. Welcome.
welcome to you. Thank you for being...
Usually we see you on a little screen on
exactly
in our studio.
The box.
So it's good to see you here in person. What's the tone that you're taking away here on this first day at Schwab Impact?
Well, I think, and it's awesome to have you here with in our ecosystem, so to speak, right? The retail advisor. Yeah, look, it's all energy, right? It's a lot of excitement. You know, I've always said, and I often say that asset management and tech are sort of blurring the lines a lot, and as tech gets better and better at bringing solutions to the advisory base, and we're just seeing that in these type of conferences, and impact is, just huge in our space.
Tell us about flows and stuff, and I also think if you've seen anything different or what you're hearing from your client base post-elections, right? One element of what is it going to be, how's it going to play out is off the table, and then there's a new set in terms of the policies to come.
Yeah, for sure. I mean, of course, there was the Trump trade, and, if you happen to get, I won't say happen, if you made that bet, and, pharma and fossil fuels and financials, and we're going to have lower regulation and everything. I mean, certainly you made a buck, right? If you went for that trade.
Crypto.
Boom, right?
Wait, when you say pharma, do you mean shorting pharma, or do you mean
just lower regulations, right? The whole idea
if
around
RFK's in charge, he might get a little angry with pharma.
You're right. I mean, there's new
truly, and we saw pharma
point.
companies fall when his name was floated or when his name was announced.
And there's new and every day, right? New information, especially now that we're getting all the cabinet picks. I think I draw the line between what was happening prior to the election and what people were kind of obviously taking that bet, and the market price can only reflect probabilities plus the outcome, and it's one number to reflect all of that. So yeah, probably if you made these bets ahead of time, you made that buck. Now where you stand is how well is the market pricing in exactly that kind of information that you're talking about, not just do I think that this administration will be good for pharma, do I think this administration will be good for fossil fuels, but how well is the market pricing in that likelihood, and can I hang on for the ride?
It's so interesting. Tim brought this up. Our Matt Miller and
Norma Linda
were anchoring just before us and just saying how NVIDIA is the most important thing, even more than what the Fed's going to do next. Having said that, what the Fed does next is important. And I think what we think today may not be exactly what we're going to be thinking a week before the Fed meeting. Yeah. So how are you thinking about Fed policy right now?
I'll tell you, I have erred on the side of they're going to need to be cautious about these rate cuts. In fact, I didn't really expect that 50 basis point, right? And, I think it was pre-election and they decided to do it. I think they thought they were behind in July. But when you see inflation kind of sticking and you understand that, tariffs could potentially be inflationary, we may be looking at an administration that wants to run the economy a bit hot. They're looking at fiscal policy and, monetary policy that maybe has to counteract some of that.
Right.
So when you put that together, I just don't think we can expect the big tailwind from interest rate cuts in the coming year.
Interesting.
Wait, so nothing December?
I think December is definitely on the table,
okay.
And the base case is yes. But I also don't think it's out of the realm of possibility that they don't do it in December, depending on the data that comes out between now and then.
So does that mean a higher terminal rate? Does that mean that the new sort of normal stance of monetary policy is high forever?
I think higher for longer. And we're back to this terminology, right?
Think about the round trip we did a year ago, Carol.
I know.
We were sitting here after Jay Powell gives a press conference, let's say 11 months ago. Basically we'll see, 6-7 rate cuts in 2024. That obviously did not happen. Now the question is, okay, well, is the terminal rate something higher than we thought it would be?
I think the market has overshot the expectation of rate cuts. You just said it, right? Just going back to what we saw, of course, where did we begin this year, right? With this huge expectation of rate cuts. And that never made any sense depending on, what the economy was doing anyway. I think we've overshot. I think the end point, it depends on where you call this end point. Yes, I think it could be a little bit higher than what is anticipated. But I also think the slowness of the cuts and the market, pricing that in and there's a little bit of a case here to just stop the rate cuts altogether for now.
It's amazing. You guys shared, your team shared some notes from you and said, knowing what a candidate favors also doesn't do much for figuring out what will prevail over the course of the presidency from a stock return perspective. For example, coal stocks have excelled under Biden, while clean energy shares outperformed under Trump. And you say that's our data, Bloomberg data.
Yeah.
So it's right, it's just,
yes.
It just reminds us there's so much that we know that we don't know?
It's numerator and denominator, right? You know, it's what's going to be good for the revenue of these companies, but also how much the market has discounted that capability. And if there's too much of a discount, you know, then it can't meet that. And that goes right into NVIDIA. Is it price to perfection, or is it, you know, way past the price of perfection?
So talk to us about NVIDIA. It's our focus right now, and understandably, in about 13 minutes, we're going to be breaking down those results. We were saying that options trading right now signals that the results will be the most significant, important catalyst left this year. How are you thinking about it? What you might be ultimately hearing from clients and investors later? I don't know. Tie it up for us.
The way that we think about it is when we look at portfolios and just we look at the research too around just what it's done to portfolios, the intense concentration in these indexes, these big names like NVIDIA, and so much of investor portfolios are actually sitting on these outcomes. And I don't think a lot of investors understand that, right? So if you say, okay, NVIDIA beat expectations and it does phenomenally well, you know, that's fantastic. Even if NVIDIA's, I think we all know, NVIDIA's got a very good product that is going to drive for a long period of time.
People are still buying.
Growth. Yeah, right. So what happens in this moment is not super important for the course of what happens with AI over the course of the year, but we are living in a period of concentration where it is super important for our client portfolios.
People want to know, right? They care. They care. There are just certain things that are like guiding lights. Dana, so great to catch up with you again.
Thank you for having me.
Yeah, thank you. Dana Dioria, Co-Chief Investment Officer, Avid Vestnet, joining us right here at Schwab Impact.
Hey, we're still getting earnings. It's not just NVIDIA, Carol. Snowflake shares are surging higher in the after hours, up by 13.8%. We can go ahead and round that up to 14%. The company sees fourth quarter adjusted operating margin at 4%. The company sees fourth quarter product revenue coming in above estimates. The estimates were for $890 million. The company sees $906 to $911 million. Snowflake also seeing adjusted third quarter revenue, or reporting third quarter revenue rather, at $942.1 million. That handily beats the estimates. The company sees fiscal year product revenue coming in above estimates at $3.43 billion. The company did see $3.336 billion, and that was indeed the estimate. Also, a big announcement from the company. They are going to buy Datavolo. It's the open data integration platform. The company also shares higher right now, Carol, in the after hours by about 13%. And it looks like other similar companies are moving higher, including MongoDB and Datadog.
Listen, Snowflake's been down about 35% year to date. About 4% of the float was shorted. Not such a huge position, but nonetheless, it's been kind of grinding its way back here. So to see these results, investors ultimately impressed, and you've got the stock up about 13% here in the aftermarket. All right, awaiting NVIDIA coming out in about 10 minutes. In the meantime, we're going to talk a little bit about ETFs right now. A new record, 96% of ETFs have posted positive returns over the past year. The majority of products headed for double-digit wins. Our Bloomberg Intelligence team did some analysis, and this is what they found out. And Tim, the average U.S. domiciled ETF up 14% over the past 12 months. Everybody's all in.
Yeah, they are. It's like the normal thing, ETFs now. I mean, get this. Schwab started in the ETF business 15 years ago. It's one of the dominant players. They got 31 ETFs, including 10 fixed income offerings, making it the fifth largest provider of ETFs. With more, let's bring in David Botzett, Managing Director, Head of Innovation and Stewardship at Schwab, here on site in San Francisco.
Hello.
Good to see you.
Good to see you. It's been since last year since we talked at Impact in Philadelphia.
Nothing's gone on in the past year.
Nothing at all.
Well, it's funny. You think about innovation in the space, and we've seen some big innovations this year when it comes to crypto ETFs, specifically Bitcoin and Ether ETFs. How do you think about innovation when it comes to ETFs?
You know, the first thing we start with is, what are the investor needs? You know, that's at the heart and the ethos of everything we've been doing in ETFs for the past 15 years, you mentioned, and that's really helped compel us to up to $400 billion in assets in our ETFs. So we've been doing an annual ETF investor study now for over a decade. That's asking questions of both ETF investors and non-ETF investors about their various views on how do they think about ETFs, what's most important to them about what they're investing in, and what categories they may invest in the future. That provides us a lot of great insights to help drive our innovation in the space.
All right, so for non-ETF investors versus ETF investors, what they want, is it different?
You know, there are some nuances to that. So in some cases, it's very much the same. It's things that they're looking at when they're selecting an ETF, like cost.
Yeah.
Right? That stands out in both categories. But there are other areas where we see non-ETF investors, they need more education, they need more insight because their confidence level in selecting an ETF is much less than those that are ETF investors.
Makes sense.
It does.
Hey, listen, one thing that they need is a mortgage-backed security ETF, which just you guys launched this week, 1 day ago, yesterday?
Yes, it was.
So tell us about that.
You know, when we listen to our investor base, the one thing that they tell us is we need more precise tools for our fixed income allocation. You know, we go back a decade and everybody was using the aggregate index to get their fixed income exposure. But in a dynamic interest rate environment like we're in today, they want to control for sector exposure. They want to control for duration. They want to control for the credit quality in their portfolio. Mortgage-backed securities is one of those that frequently are utilized in a portfolio, but they think about how do I redynamicize that aggregate exposure. They want that precision in an MBS ETF.
Are you thinking about getting into what our own Eric Balchunas over at Bloomberg Intelligence calls the hot sauce ETFs? Like,
What's the hot sauce?
If you got 95% of your portfolio, you know, in large cap stocks and maybe some bond funds, you got 5% to play with. Maybe you throw some into ARK or you throw some into Bitcoin ETF. Are you guys thinking about getting into that sort of specialty category? Maybe go leveraged NVIDIA ETF?
You know, our bread and butter largely is in the core.
He sounds like an ETF analyst. I'm impressed.
I listen to Eric Balchunas.
He does. Eric's a great guy.
He is a great guy.
Love to work with him. But, you know, our bread and butter is really in the core products and solutions, right? Because where we see the benefit that we can provide as an ETF provider is on cost, which is number one in our survey year and year again.
Cost.
The number one thing people look at.
So there's a race to the bottom with those sort of big, broad ETFs because there is so much competition. And that's why I think you see a lot of innovation happening in okay, well, how can we make our product unique?
Yes.
And also charge 50 basis points instead of 8 basis points.
Yes. Well, I think you'll see us innovating in that space is less on those hot sauce areas, and it's more thinking about how do we use the ETF wrapper in other ways. Bring actively managed strategies. You know, earlier this year we launched the Schwab Ultra Short Income ETF. You know, you look at that ultra short space, it's really hard to index that category.
Right.
We also think it's an area where an active manager can potentially provide alpha.
Is it all about active going forward?
You know, I don't think it's all
Actively
about
managed?
active,
Yeah.
but increasingly you're seeing that in that space. That's either coming through new launches or conversions of active mutual funds into ETFs, and they're taking an outsized portion of the flows this year.
I always think about this, David. I began kind of my career in business news.
You had a show, an ETF show, right? Or a mutual fund show.
It was a mutual fund show not so long ago, and it's just interesting to see the arc and how we moved to ETF. When is it that we just don't have mutual funds and it's all about ETFs? Is it just a matter of time?
I don't think so.
Why?
I think there's a
Why? Why do we need
I
both?
think it's all about the benefits the ETF provides. It can provide a cost benefit. It can provide a tax benefit because they tend to be more tax efficient, and a trading benefit. But in many accounts where it's a qualified account, you're not paying taxes, that tax benefit isn't there. You also see a lot of strategic allocations.
So longer term, like
longer
you're
term
talking about
investors, 401k plans, retirement plans, where you may not necessarily need that tax benefit or the ability to trade every day in your allocation if I'm more of a strategic investor.
Are investors, though, who are planning for their retirement missing alpha, though, by doing mutual funds that way? Like, I mean, are they missing out on opportunities potentially?
I think potentially and increasingly they may miss out on those opportunities because the innovation is going to be more in the ETFs than it is in mutual funds. So in those new opportunities that arise.
What about money market ETFs versus money market mutual funds?
You know, it's interesting. We're seeing some work by other firms in that space. It'll be interesting to see how.
But right now,
that
if I want to
evolves.
buy a money market fund at Charles Schwab, I have to buy a mutual fund.
It is in a fund structure. That's right.
Why is that?
Well, I mean, I think the people like the dollar NAV, right? That's one of the big distinctions we've seen with the one product that is in the market today. You're no longer trading at $1 like you do with a money market fund. It's dollar in, dollar out. You like that known factor. And I'm not sure that investors will necessarily want to stray for that when they think about their cash investments.
How does the macro play into the ETFs that you guys are thinking about in terms of launches?
You know, for us, it's really about the long-term view. It's less about a macro current point in time. It's really thinking about how do we serve investors' needs for the long haul.
So even like, you know, a new administration, new policies that might impact the economy and various sectors, it's not the way you play it.
It's not the way we play it. That's right.
All right. Interesting. Does the macro view, though, I mean, as you look at what's going on in the space, how does it impact at all your thinking?
Yeah, so I think where it impacts our thinking is when we talk to investors about how to allocate their portfolios.
Okay.
Right? You think about our...
Do they have lots of questions right now?
Absolutely.
Let's say you were to just think about the universe of ETFs in your world. How much of those ETFs are, when the money comes in, is it about indexing versus about something outside of indexing to try to get alpha?
I think it's the way that indexing is used, right? Model portfolio strategic allocations. It's more about how do I tilt between large cap and small cap, domestic, international, looking for those alpha opportunities rather than within the asset class itself.
We mentioned you guys, 15 years, just celebrated your anniversary from your first ETF. How do you think about the trajectory and kind of where the ETF market was at the beginning? I remember a time I felt like every guest or every other guest was somebody offering up a new ETF. I feel like it's found a different groove now and it's matured, but tell us about it. You've been in it.
Yeah, I've been in the ETF industry for nearly 20 years, so it's been a long time. It's been a great run, but we've still got a lot of innovation to go. So I think we're just in the early innings still of what the ETF can bring to investors.
NVIDIA ETF, is it coming anytime soon?
They have, I think, Direction.
Yes.
Is it Direction?
There are some single stock levered ETFs in the marketplace.
That's what I was thinking of when I was referring to that leveraged NVIDIA
You were channeling your inner Eric.
He was indeed. David, thank you so much. Fun to check in with you again.
Thanks so much.
I hope Eric is listening and knows that I'm giving him all this love.
He better. I'll point it out to him.
Come on, Eric.
David Botzett, Managing Director, Head of Innovation and Stewardship over at Schwab, joining us right here at Schwab Impact. David, thanks again.
Thank you.
All right, folks, our focus now, just under a minute away. We expect NVIDIA numbers to cross at any moment. I'm kind of watching our live blog. I'm just taking a look, pulling up NVIDIA here in the aftermarket ahead of those results. It's flat, no surprise, but we are waiting.
Well, let's talk about implications of those numbers as we do get them in just about a minute. It's due to report an unusually complex quarter as the world's most valuable company. Traders are preparing for a potentially mammoth stock swing. The option implied move for NVIDIA shares tomorrow is about 8% in either direction. That's according to data compiled by Bloomberg. So it's close to a $300 billion swing in market value.
Yeah, B of A. Strategists say the report carries significant risks for the benchmark index.
More risk.
And it could have a bigger impact than the next Federal Reserve meeting or inflation data. So it's the new product line. We're going to be watching for headlines, commentary around Blackwell. Its production delays have led to a wide spread in analyst expectations, making it challenging for the company to meet those high expectations. So again, here we are. Just we're assuming those numbers are going to cross any moment from now. And so the expectations are high. I mean, this is a stock that has just been on a tear the last 1.5 years. It's up almost 200% here in 2024 after a stellar run last year. But the numbers are crossing. Go to it.
All right. Third quarter adjusted earnings per share coming in above estimates at 81 cents. Estimate was for 74 cents. Third quarter revenue coming in at $35.1 billion. Estimates were for $33.25 billion. Third quarter data center revenue. This is what everybody wants to see. That coming in above estimates, $30.8 billion. The estimate was for $29.14 billion. Carol, NVIDIA sees fourth quarter revenue at $37.5 billion, plus or minus 2%. The estimate was for $37.1 billion.
Got to say, initial reaction, folks, not an upbeat one. The stock's just down about 3.5%. It's bouncing around, so we're going to see if this settles because it looks like the outlook, as Tim just mentioned, this is what we care about. Fourth quarter revenue, $37.5 billion, plus or minus 2%. The estimate on the street was $37.1 billion. It's too close in that margin, and I think there's some disappointment initially from the investor community, and that's why you're seeing the stock down again in the aftermarket. Let me just pull it up and just get another read. It's down about 4%.
We're getting some commentary too, and we'll expect more commentary when that call does get underway. But NVIDIA does say that Hopper demand and Blackwell anticipation is, quote, incredible.
Incredible. Okay. Incredible can mean a lot of things, and we're going to look.
Incredibly high, or it's incredible?
Or it's incredible. The age of AI is in full steam, says NVIDIA's Wang. He's making some commentary, of course, the head of the company, so we're going to look for some more information in terms of what he says. Fourth quarter revenue estimates range 34 to 41.19 billion. Fourth quarter adjusted gross margin, again, this is getting to the outlook, folks, 73% to 74%. The estimate is 73.5%, so that's kind of spot on. Networking demand is strong and growing. Again, this is commentary from the release. Blackwell production shipments, they are expected to begin in the fourth quarter of fiscal year 2025. So we're getting some timing around that. Networking demand is strong and growing. So again, some more thoughts. And I'm just looking again at the stock, still down, Tim, about 4.6% in the aftermarket.
Yeah, go into our live blog. Worth repeating some of these headlines as we do get our guests ready in the studio. They need some time also to look at these numbers.
Absolutely.
NVIDIA sees fourth quarter revenue coming in at $37.5 billion, plus or minus 2%. The estimate was for $37.1 billion. That third quarter data center revenue, though, that coming in above estimates at $30.8 billion. The estimate was for $29.1 billion.
Yeah, exactly. NVIDIA says Blackwell production shipments to ramp into fiscal year 26. So, I mean, they're giving us, some thoughts into the fourth quarter of fiscal year 2025 when it comes to Blackwell shipments to start then and then to ramp up into fiscal year 2026. So I would say that they are giving us some visibility, but maybe at least at first blush that, okay, so now the loss in the aftermarket is about 2%. So we are pairing that 4.5% loss. So we are moving off of that. So maybe investors are a little bit happier.
Okay, well, I guess I've had 3 minutes to digest these numbers and give us some
plenty of time.
Very important conclusions. I want to bring in right now Bloomberg Intelligence Senior Semiconductor Analyst Kunjan Sabani, joining us from San Francisco, and Bloomberg News Managing Editor of Technology and Global Cybersecurity, Lynn Duan. She's in our Bloomberg Interactive Brokers studio in New York. Kunjan, I do want to start with you. Why are you seeing the equity market reaction to the downside, given that this looks like, on its surface, a pretty positive report?
Yeah, it is, but I think the key thing is the fourth quarter guide came in very slightly above. Now, generally, the lowest we have seen them beat is about 4 to 5% than the estimates. This is close to, I think, just 1% or slightly above 1% beat. So not the similar magnitude of beat that we have grown accustomed to expect from NVIDIA. So I think that's where some of the reaction is coming into. Maybe concerns around those Blackwell shipments that we expected might not be as big of a size in 4Q.
I just want to throw some more headlines at that as NVIDIA pairs some of its losses in the aftermarket. NVIDIA Blackwell to exceed supply for several quarters in fiscal year 2026. Hopper Blackwell systems, they do have some supply constraints. And again, let me just pull up the stock in the aftermarket, now down about 1%. So we've paired that more than 4.5% decline. Kunjan, I'm just wondering too, supply constraints, is it a case of the demand is there, they got to figure out their supply problems?
Exactly, and that's a very healthy sign. If you just move past this smaller beat from 4Q, you start thinking about long term. That's a very positive sign. That means fiscal 26, which is calendar 25, gets ready for even a higher upside for Blackwell. Just maybe the timing is shipped out, and definitely we have heard this again and again that the demand continues to exceed more than supply.
Hey, Lynn Duan, come on in here because you've had a few minutes to look at this. It seems like the headline right here from Rowan King is that the forecast has failed to meet the loftiest estimates for NVIDIA, the AI star. What are the implications that this has across the sector?
Yeah, I blame Kunjan for that and all the other analysts who have set unrealistic expectations for NVIDIA over the past 10 years. People are so used to seeing them blow these forecasts out of the water, and they didn't this time. It's really sad to me is that, they still beat, and yet people are just expecting them to beat by as much as $2 billion, and they couldn't do it this time. You were talking about the Blackwell demand. And
Lynn, the stock is up 200% this year. Expectations are high.
It's not enough for the NVIDIA bulls. They want to just keep it coming up and up and up. One of you mentioned the quote that they're using now. What are they using? Incredible demand. A month ago, Jensen Huang was using insane demand. So we are suddenly coming down from insane levels to incredible levels. Somebody asked about the supply chain constraints. I think the broader industry takeaway there is no lack or absence of demand for these Blackwell chips. The question becomes, is the rest of the supply chain set up to produce as much as the market needs? And it seems like NVIDIA is acknowledging that is the problem here. TSMC is the biggest question mark because it is a critical manufacturer for NVIDIA. And so people will be looking in this earnings call with Jensen Huang for insight into whether TSMC can live up to that promise.
Hey guys, help me out here. And Kunjan, let me go back to you. We talked about supply. I mean, it's great to have strong demand. If you can't meet the supply, that's a bummer. You know, customers could go elsewhere. Oh, wait a minute. Customers aren't going to go elsewhere. So, I mean, this is NVIDIA's game to lose, but they've got to figure out the supply stuff, right?
I mean, they do, but it's not just them here. Like when we talk about NVIDIA supply, you're talking about the entire industry's supply to be able to supply these chips, right? So if they cannot meet the demand, nobody can. There's no other sort of similar at the level alternative. And it's just the industry demand is higher than what the industry can supply.
Hey, Kunjan, how big of an issue is super microcomputers woes for NVIDIA?
Great question.
The third biggest, according to the Bloomberg supply chain function on the terminal, super microcomputer accounts for close to 8% of NVIDIA's revenue. It's the third biggest customer after Microsoft and Meta Platforms. That company's super microcomputers, that is, the struggles have been well documented and the stock has reacted accordingly. How should investors think about that?
Yeah, you know, I can't comment about the issues that they are facing, whether it's from audit perspective or the stock perspective. But when we just look at the fundamental supply chain, I mean, there doesn't seem to be high risk there. It seems from most of the data we have seen that the sales that were made through them seems to be normal, regular sales. And now, even if you take the worst case scenario and you think, okay, this customer won't exist, which is really a OEM manufacturer, right? The competitors to that company can easily pick up that volume, like someone like HPE, someone like Dell can easily take their place and take up that volume and sell the NVIDIA systems to their customers.
So I want to, Lynn, come on back in here. I am thinking, too, about the impact that NVIDIA could have on the AI trade, also on just kind of the overall market momentum. We have seen some AMD is down about 1% here in the aftermarket. Dell was down about 0.5%. We have seen some reaction among other AI-linked names. So, you know, let's broaden out here. NVIDIA is just such a bellwether when it comes to all things AI, and we understand why. How does this report, if at all, shape your thinking about what's going on when it comes to the AI ramp-up?
I think people will take it with a grain of salt. I don't know that anybody will look at this earnings report and say, well, I guess the AI boom is over, and like call an end to the entire thing. They're still facing extreme demand. Incredible, I think, was the word he used. And I think, if anything, NVIDIA will be emblematic of what we have seen this entire earnings season across the chip supply chain and across AI, which is that the demand has been choppy. Some have been big winners. Some have been big losers. I think you're seeing some choppiness, and I think you're seeing mostly because the fundamentals here are strong, as our analyst just said. Mostly what you're seeing is like a tempering of Wall Street's expectations, if anything. It says less about the AI boom and more about how the market is perceiving it, and sort of like a wake up to the reality that maybe it isn't going to be this massive profit machine, but more of a steady stream of revenue.
All right, interesting. I'm looking at NASDAQ E-mini futures, NASDAQ 100 E-mini futures. They're just down about 0.5% here in the aftermarket, so I was just curious about broader reaction. Bloomberg News Managing Editor of Tech and Global Cybersecurity, Lynn Dewan, thanks for your input. Kunjan Sobhani of our Bloomberg Intelligence Senior Semiconductor Team, he's an analyst. He's going to stick around, and then we're going to want to bring in another guest to kind of give us some more thoughts about what we got from NVIDIA today.
Yeah, Caroline Hyde, who hosts Bloomberg Technology on Bloomberg TV, is joining us now. She's got her eyes closely watching everything happening over at NVIDIA. That forecast failing to meet the loftiest estimates for the company. Shares in the after hours right now down about 4%, so they're off of those lows, Caroline. But is this just about high expectations, very high expectations, and NVIDIA coming out and saying, okay, we're almost going to meet them, but not quite?
And a very high market valuation that is the most valuable in the world, that has seen a run-up of almost 200% so far in the year. So maybe some profit taking when you are seeing, yes, Loop Capital. If you dig into the analysts' expectations for the fiscal fourth quarter of 2025, Loop Capital had it at about $44 billion as the highest realm. Then you had Fubon Securities at about $41 billion. And then you get into the $37 billion range with the likes of Craig Hullum, and D.A. Davidson was a little bit above that. So compared to perhaps some of the highest levels out there, they're coming in a bit below. And there's a plus or minus 2% there to be built in as well. So I think there is some digesting that this isn't beaten, raised, and blown out of every single analyst's expectations. Still, these are incredibly strong numbers. This is a guide to the fact that we're getting Blackwell on stream, that supply side will be ironed out, and I think we'll hear far more from Jensen Huang on that particular perspective, and that demand is still incredible. So I think there's just a little bit of profit taking coming on when we've seen that the rapid rise has been 200% over the year. Maybe 4 or 5% sell down isn't the most remarkable shift.
Caroline, great point, right? It's not
perspective.
Yeah, well, listen, this is her world, and she's talking to these, tech companies, following them inside and outside, and this idea that there's still supply, that there's demand. It's just these supply constraints. It's not like people are running away from the products. Having said that, I want to tap into your knowledge of this industry, and that you do have companies that come out and it's gangbusters, and then maybe they have some issues with supply constraints and so on and so forth. This is kind of part of the process. Is that fair?
I think that's fair when it comes to NVIDIA as well, and the rapid rate of innovation. I mean, they've almost become an Apple, and every single year they're bringing out their latest new chipset and design, and we go from Hopper swiftly on to Blackwell, and people have got to keep up with that innovation. Just the way in which you store your chips and the infrastructure within your data centers means that if they're vertically stored, well, that's going to lead to more heating issues than if you're doing it more broadly on a horizontal perspective. There is a lot of innovation that has to come along with NVIDIA's own GPUs, CPUs, and overall chipsets. So I think that they have said and guided to the market that, yes, you're getting this reporting of overheating. Yes, you're getting these reports of snags in design. This is entirely normal, and we're working very closely with our hyperscale clients to fix this, to innovate with them and ensure that we can get them out there as swiftly as possible. I think there has been, and also just a trying to spreading out of AI demand. What's been interesting hearing from Jensen Huang of late has been the scaling laws. Look, basically the theory goes is that the more data you fire, the more compute power you bring, the faster and more sophisticated these large language models become. But actually we started to hear from the Anthropics, from this great reporting coming out of San Francisco of the Bloomberg team, that Rachel Metz is saying maybe OpenAI has had to slow down a little bit in terms of the developments of their own large language models because they're not getting as sophisticated as they have been in the leaps and bounds. Jensen's still saying, look, in the next decade, you're going to see 1 million times increase in compute, but we've just got to get there in terms of actually making it happen.
Sounds good. You just
yeah,
gotta get
I mean,
there,
hard
right?
to even imagine. Hard
Right?
to even imagine that kind of increase in compute at this point. Kunjan Sabani, I want to bring you back in here, over senior analyst over at Bloomberg Intelligence. We're seeing shares down about 2% in the after hours. A couple headlines: the company sees fourth quarter revenue coming in at $37.5 billion, plus or minus 2%. That's pretty much in line with estimates at $37.1 billion. Third quarter data center revenue blowing past expectations at $30.8 billion. Estimates were for $29.1 billion. Kunjan, what's the question you'd ask Jensen Huang on the call today?
I mean, my questions really would focus on trying to figure out the fiscal 2026, calendar 2025 Blackwell revenue ramp magnitudes and around gross margins. I mean, look, we have seen in the past when NVIDIA has come out and beat way more than what they did right now, and the stock has still plummeted about double digits. You also have to keep in mind this end of the year, the stock has tripled this year, right? So there is some incentive for profit locking and taking the gains away from the table as well.
I also do think about, how do you feel, Kunjan, that they are giving numbers for fiscal year 2026? Good sign? Do you trust that visibility? How do you think about their ability to put out a number, and maybe that number might change based on if they figure out the supply issues?
I mean, I see that as a very strong sign. I mean, look at this earnings season across the semi-sector, right? Nobody is giving out numbers that far out. Even NVIDIA's competitors who are trying to address the same opportunity and are seeing the same strong demand signals are not giving out numbers, strong, confident numbers that in year out. So that really speaks to the strength and the confidence that they have that they'll be able to support this demand, and the demand is there.
Okay, so the call starts in about 30 minutes, more or less, 25 minutes. Caroline, what are you going to be listening for on the call today? What do you expect the question that analysts are going to be asking?
And you guys at BTech talk to him a lot. I'm just curious what's top of mind if you were sitting down with him right now. top two questions.
And if Ed Ludlow was, but he's out on paternity leave, so congratulations to on Ed Ludlow becoming a father. But I think first and foremost would be asking exactly as Kunjan has been saying, as you all have been saying, it's got to be about supply coming on tap and just talking a little bit more around Blackwell and the incredible demand. What exactly does that really mean? Who are the key clients? How are we seeing that diversify out of the main hyperscalers, if at all? And then I think sort of trying to articulate that, look, yes, maybe we haven't blown past the highest analyst expectations, but $37.5 billion guide, that's still 70% ramp up in revenue. That's following a 90% ramp up in revenue of the fiscal quarter just reported, their fiscal third quarter. I think he's just going to have to sort of remind the market how far they've come, how far they've still to go, and maybe just take a bit of a reality check here that, you know, at the moment the numbers will go up, but maybe not at the 200% that we were hoping to see, well, that we did see in the first quarter of 2025 for their fiscal year reporting.
Hey, Kunjan, Ian King on the live blog bringing up a really interesting point, and it kind of gets at the question that I was asking with regard to Supermicro Computer. Ian notes that cloud computing providers are the biggest companies in technology, and they still dominate NVIDIA's sources of revenue, making up 50% of sales for its data center unit. So that's just a handful of companies that are making up the majority of the revenue for the data center. NVIDIA watchers want that number to go down. 3 months ago, that number was 45%. Is that a concern to you?
I mean, I don't want to look at it from quarter to quarter because remember, these large customers are lumpy in nature, right? They have to also manage their CapEx and deployments. We did see over the last 2 to 3 quarters, if I'm not wrong, the number come down. It was about close to 50 or even above 50, and it has been coming down steadily. So that was a good sign for us. I still have to go and digest the numbers later on, but the 50% in the short term might not be that great of a sign, but I would not jump to conclusions just looking at one quarter. It could be very well timing of, you know, them picking up a lot more Hopper supply right now when they cannot get their hands on Blackwell.
You know, I'm looking at the supply chain analysis on the Bloomberg function when it comes to NVIDIA. Microsoft, about 19% of the revenue for NVIDIA. Meta, about 10%. Supermicro, nearly 8%. Alphabet, about 6%, Amazon more than 5%, Dell more than 3%. So we talk about
a handful of companies.
These cluster of companies that are so involved. You know, Caroline, I want to bring you back in here. You know, NVIDIA, this has been such a focal point, right? The end of the earnings season. Just thinking about it so much. You know, how do you think about, you know, Bloomberg Technology, you know, into the Thursday edition, you guys, when you're on air, and like, what's the tomorrow story?
The tomorrow story, I think, will be trying to articulate where the growth trajectory goes from here. I think we're going to hear from Jensen the next decade. You're going to hear him talking about humanoid robots. You're going to hear him talking about drug discovery, the capabilities of generative AI, the return on AI investment. So I think we're going to want to be talking to the investors that back that vision. We're going to be wanting to hear from the analysts out there that are trying to square these numbers with where their own viewpoint have been on the here and now of fiscal fourth quarter. But I think we're also going to want to think about who else is in the space at the moment that's answering some of the development issues, some of the heating issues, some of the concerns around AI, generative AI chip development and manufacturing. Who are the startups in the space? Who are the rivals in the space? What are we seeing in terms of the hyperscalers building their own chips? So I think there's so many directions that we could go for, but for me, it's going to be really interesting talking about where does AI infrastructure go from here, and where does NVIDIA's view on sovereign AI, where does NVIDIA's view on China, where does NVIDIA's view on the next repurposing of their chips, not just to keep hammering large language models, but the development of generative AI in the real world.
So what are some of the names, Caroline, that our investing audience has to have their eyes on? Is it the Sam Altmans of the world who are trying to raise lots and lots of money to go after NVIDIA? Is it the hyperscalers who are going to be doing this in-house? Who holds a candle to them, or who could hold a candle to them?
In terms of siphoning off future demand, or in terms of just wanting to know who the name of key players are? Holding a
in terms
candle
of siphoning off future demand, because, you know, Intel's in a tough position right now, as you guys have reported on a lot over the last year. AMD, maybe, but what about those upstarts?
I mean, that's going to be interesting as to whether or not we just get a future type of chip development. You know, we've got the Groks, for example, that are backed by venture backing, who have been looking to ways in which we expand and have faster and more efficient chips. You've also got, different players out there thinking about not just the data that you have to train, but then the inferencing that you do, and does that become a different type of conversation around the technology, and ultimately whether you need to have more efficient chips within an energy source and an energy suck. So I think so many people, Ampere has been doing things around that particular innovation of different types of chips. Eventually, will people start to go to Gaudi and what Intel has been providing? How much can AMD chip away in terms of market share, in terms of the AI part of the business as well? So there are so many people and analysts and investors that are looking at distributing some of their bets, I'm sure. But for now, NVIDIA has been the only game in town, and certainly the easiest one to back in terms of up and to the right.
Kunjan, I want to bring you back in here, looking at our live blog. Ian King, who follows the semiconductor space, NVIDIA as well. He says one question analysts will have when the conference call begins: what's happening in networking? Sales in that business slid sequentially, dropping by about $500 million. NVIDIA's acquired networking tech has faced opposition from many rivals, some of which argue for an industry standard approach rather than a reliance on NVIDIA's proprietary technology. Weigh in on that.
Yeah, I mean, look, we have identified since last year that networking in AI servers is going to be sort of the next wave of growth, especially in terms of where the dollars go beyond just accelerators. So, I mean, until now, NVIDIA, if you look at the market, for the first Hopper series, right? They had this advantage of shipping their own proprietary networking gear, which customers had no other option but to just buy that. So two things, right? They got all the dollars, but they also got great profit margins because they could really charge whatever they wanted. Now the competition there is increasing. Customers want to move to Ethernet, which again, NVIDIA has started offering, and starting from the Blackwell series. So we are going to see that Ethernet revenue also increase for NVIDIA. But when you compare it from per chip dollar perspective, it's still less. We still think positive for NVIDIA's networking revenue share going forward, but there will be a lot more competition there. It won't be just one company taking everything in that area.
That's a really good point, right? And I do think about, NVIDIA's really had this world to its own for a while, and you think about increasingly kind of what's going on in the future as there's more competition. You two, dynamic duo, thank you so much. Your insight, really so important to breaking down these results from NVIDIA. Bloomberg Technology co-host Caroline Hyde, catch her at 11 a.m. Wall Street time on Bloomberg Television for Bloomberg Tech. And, of course, our thanks to Kunjan Sabani of our Bloomberg Intelligence team. He's a senior semiconductor analyst. So, again, some great insight. And we'll watch for some of his research as it comes out later today and into tomorrow on the NVIDIA results. And really what we get more in terms of context on that analyst call with Jensen Huang.
About 15 minutes away from that call. Shares of NVIDIA down about 2% in the after hours right now. Look, people don't really care about the other segments of NVIDIA, but they're worth mentioning. Third quarter gaming revenue.
But what he just said about networking, it's something that's a growth area when it comes to AI, and that the concern is they've had it all to themselves, and if there's more that comes on. So forgive me, but go ahead, gaming.
Yeah, the
other
areas,
stuff.
Right, the areas that I'm talking about. This is what NVIDIA was known for before,
right.
It got into those chips
but
that were used.
It was a gaming chip company.
Absolutely. So it still has gaming revenue. Don't forget about it. That came in above estimates, $3.3 billion. Estimates were for $3.1 billion. In professional visualization revenue coming in above estimates at $486 million, beating estimates of $478 million. And then another beat when it comes to third quarter automotive and robotics revenue, $449 million. Estimates were for $364 million.
They're an AI company.
They are. But the real number that everybody wants to know is what's the fourth quarter revenue outlook? $37.5 billion, plus or minus 2%, pretty much in line with that $37.1 billion. And then, of course, the data center revenue, which includes those chips that we talk about each and every day. That came in above estimates at $30.8 billion. Estimate was for $29.1 billion.
Our Cameron Cry is just crossing with a story. NVIDIA guidance will be a Rorschach test for market psychology. And he says, in the case of NVIDIA, the recent run-up in the stock suggested a market that was more optimistic than the analysts. And I've been looking and watching NASDAQ 100 futures, E-mini futures in the aftermarket. It's just down about 0.2% because I was just curious about the broader market impact, certainly on the tech trade. And this is as NVIDIA is still down about 2%, but it was down double that, more than double that when those earnings first hit, the results hit.
Well, remember, the average analyst estimate was for $37.1 billion. $41 billion was the highest estimate.
So it fell
quite a bit short of that. Yeah, quite a bit of a range. Company guidance coming in at $37.5 billion, plus or minus 2%.
All right, let's get more on the aftermarket and on that trade with NVIDIA and impact across the board. Let's head back to New York City, Bloomberg headquarters in New York, and Charlie.
All right, I thank you very much. Recapping, resetting here. We've got NVIDIA shares after hours now trading lower by 1.1%. As Carol mentioned, have been down substantially more after hours. NVIDIA did deliver a revenue forecast that failed to meet the highest expectations, showing that its dizzying AI-fueled growth run has its limits. NVIDIA also says Blackwell demand will exceed supply for several quarters. After hours again, NVIDIA down now by just about 2%. Reaction to the NVIDIA report from Lynn Duan, Bloomberg's managing editor of technology and global security.
There is no lack or absence of demand for these Blackwell chips. The question becomes, is the rest of the supply chain set up to produce as much as the market needs? And it seems like NVIDIA is acknowledging that that is the problem here.
And again, after hours, we do have shares down by 1.9%. Snowflake, meanwhile, giving a better than expected sales outlook, suggesting its newly launched products are receiving a strong reception from customers. So again, NVIDIA, after hours, tumbling now by just about 1.1%. Turned out to be an update barely for the S&P 500 index, up by less than half a point. We had the S&P ending the session at 59.17. Dow Jones Industrial Average up 139, up by 0.3%. It was a down day for the NASDAQ Composite Index, lower today by just about 0.1%. 10-year yield today, 4.41%, with a 2-year, 4.31%. Spot gold today, gold up 0.7%, 26.49 the ounce. West Texas Intermediate crude down 0.8%. Bitcoin higher today by just about 2.3%. Again, a record today for Bitcoin. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live at Schwab Impact here in San Francisco. We're going to have more interviews tomorrow, so we will get back to kind of what we're hearing. And it's going to be curious to see what people say if they're still talking about NVIDIA tomorrow.
I don't know if you noticed this because you're so focused, Carol, whereas I'm the one who's like not so focused.
It's why we work. It's why we work.
But as NVIDIA numbers were crossing, just to give people an idea of the interest in them, we have a TV set up here, a monitor set up that shows our program.
I did notice.
You saw people gathering around the monitor to look at those numbers as they came out in real time. Remember, we're at a conference here for RIAs.
Yeah.
Obviously, their clients are asking about NVIDIA, but this company with a 3.6 more or less
world's largest market cap,
$1 trillion market cap has a serious impact on the major indices, whether we're talking about the S&P 500 or the NASDAQ 100. So everyone wants to know in real time what it's doing.
Even our guests who are thinking, more broadly about the ETF space, about investing space, NVIDIA has been top of mind, certainly for investors and, investment advisors, their clients, their investor base. So it's just, it's a big one, no doubt about it. Having said that, we want to continue. NVIDIA down about 1.6% here in the aftermarket. So let's continue our conversations. Bloomberg News equities reporter Ryan Vlastelica with us. He has been writing about it and kind of, talking about markets bracing for what we might get from NVIDIA. He joins us from Chicago. Also with us is our own Red Brown, who follows the earnings season and sets us up, Bloomberg News earnings reporter. He's back in New York City. Ryan, come on in on this. Your report ahead of the release, NVIDIA traders bracing for a potential $300 billion earnings move. Stock's down about 2%. It was down more than 4%, though, initially. So I feel like that analyst call, which is, about 10 minutes away or so, that may help, kind of shape momentum and the narrative of what we might get in the marketplace tomorrow.
Yeah, absolutely. I don't think it would be all that surprising to see the stock really take some swings from where it's trading right now. I mean, this is not a huge move, especially not for a company as volatile as NVIDIA is. Just to put it in context, Palo Alto also reported that stock is down about 5% in after-hours trading. NVIDIA is obviously much bigger, but, not a huge move by their standard. People are wanting to get a little bit more context on the conference call. My bet is they will be talking about Blackwell demand, what the margins might look like there, what the margin trajectory might be from there. That's been sort of a point of concern for people to the extent they have one, given this backdrop of very strong growth. So I think that, to the extent they get a little bit more relief on that, we might see the stock pull back a little bit. Or, of course, if it's not quite as optimistic as maybe some people are hoping, we could see it, kind of retest some of the lows it saw earlier today in the post-market session.
I like that Ryan's out here talking about Palo Alto Networks. Some good
well,
there are other companies out there, no question.
But listen, Red, we're going to get to you in just a moment. But Ryan, I mean, it's been so important in terms of market momentum, right? Like, give us some of that context. We talk about it all. We've talked about the Mag 7. But when it comes to momentum, that AI, this is a big one.
Yeah, oh, absolutely. As the stock has almost tripled this year, it's added more than $2 trillion in market capitalization. Like you mentioned, it's the biggest stock in the world. We've had plenty of analysts come out and say this is more important than the Fed. This is more important than inflation data. This is the key report for Wall Street this week, if not this month. So it's obviously very significant. I do think, we just got the numbers. People are still digesting the report. We are still waiting on the conference call. It's likely we're going to get a bigger move, maybe, once we get, full details, once we hear from the management team, once people get a little bit more context for this. But this is certainly not, a sky is falling type report. It's falling short of some of the most optimistic expectations. But, people just got very used to forecasts that are just, billions of dollars above the consensus.
Kerman Reinecke, our stocks reporter on our live blog, digging into the plus or minus 2% on the revenue outlook that we got from NVIDIA.
Doing a little math.
Doing some quick math. It means NVIDIA expects fourth quarter revenue between $36.75 billion and $38.25 billion. The average analyst estimate was $37.1 billion. So if it's on the minus 2%, it would fall short of expectations. And I think that's why you're seeing investors, at least in the aftermarket, wanting a little bit more color or commentary around this.
Okay, so Red Brown, come on in here because you've got your eye on what's going on after hours. NVIDIA shares down about 2%. Is that what it is? Is that concern around that plus or minus 2%?
Yeah, I think it kind of has to be the main focus for everybody right now. It felt like analysts maybe weren't as kind of euphoric heading into this report. Things definitely were more tempered, so I guess it isn't that much of a surprise to see, stock kind of trading a little bit less volatile than it has in recent quarters. I was also just looking at some of the customers because Ryan's point, just how important this report is for the wider market, and Microsoft and Meta, two of their biggest customers, both not really reacting as well. So I think it's kind of a wait and see for the next 5 minutes here or so.
So what are you, Red, watching out for? Listen, you are with us throughout the whole earnings season. It feels like a long one, but here we are with NVIDIA, which is such a huge one in terms of the reporting season and, what we get from NVIDIA. But, how are you thinking about it as we were kind of reporting into it? Now we are on the other side. There's still some questions to be had that will hopefully play out on the analyst call. But, walk us through it in an earnings season, how this kind of fits in, especially against some of those Mag 7, those very important big tech names.
I think one thing that I'm looking at for NVIDIA specifically and kind of how it fits into the wider landscape is actually their R&D spending. So if we look, it actually grew 48%. If you compare that to their peers, Supermicro 45% up this quarter, Broadcom jumped 75%. So when we kind of start to dig in beyond just the top line numbers, I think kind of an interesting dynamic is playing out there that NVIDIA is kind of really spending hand over fist to keep up or to kind of continue to have their lead in this race. And I think it really helps when you can, double your revenue every quarter as well, that spending $3 billion on R&D
Not too bad, right?
Is a little bit easier than it is for a company like Broadcom, which is actually, the percentage-wise, the margin that they're spending is actually much higher. So that race, they are kind of still a distant second compared to NVIDIA. So trying to maintain that lead that they have in the AI space.
Hey, Ryan, what about when it comes to Blackwell and demand around Blackwell? To what extent is that the question on the call later? It went from insane to incredible, as Caroline Hyde pointed out to us. How are you thinking about it?
Yeah. Is that a deceleration to go from insane to incredible? I mean, I think, in general, demand remains very strong.
I think it is.
You tell me.
I think it is.
Insane to incredible.
Yeah, I think that's a deceleration.
Yeah. We say incredible a lot. We throw that word around. When you say insane, that's like on a whole other level.
Yeah, fair enough. Obviously, people continue to focus on supply. There have been some, production hiccups here. Like I said before, people are focused very much on, pricing and margins for Blackwell. So all these things together, this remains like a point of real focus for investors, even kind of beyond just sort of the headline numbers of the forecast and so forth.
NVIDIA now down just about 1% here as we're just minutes away from that analyst call with Jensen Huang and company. If I look at NASDAQ 100 E-minis, they're down about 0.2%. So very minor gain. Ryan, what would you say? What does this tell us that, kind of the tech market's like, we're kind of good with this overall. It's not like they're dragging down a ton of other names.
Yeah, and I think that's actually, in a way, it's sort of a success for NVIDIA, even though we're not seeing the kind of double-digit rallies that, kind of highlighted the company's real ascension to the top of Wall Street. I mean, I think the fact that numbers are pretty good here, even kind of missing the whisper number, however you want to phrase it, people can kind of live with that. I think the trends remain very strong. Certainly the narrative, I think, remains intact. And even if there is like a little bit of a slowing in growth or whatever, you think, people aren't suddenly looking at this and realizing, oh gosh, this is a bubble or this isn't playing out the way we thought. So, I'm sure there's going to be more to digest after the conference call, but certainly doesn't seem like people are too spooked by this.
We're Bloomberg. We're not done with NVIDIA. Hey, Ryan, 20 seconds. Top thing you're listening out for on that call with Jensen Huang?
Probably any commentary on the margin trajectory, especially for Blackwell.
Okay, same question to you, Red Brown. What's the top thing that you're going to be listening out for on that call with analysts between NVIDIA?
I would. My question would be, where does the growth come from next? Whether it's data processing or maybe AI-powered robotics. What could be kind of the next area for growth that they see beyond just the cloud computing?
That's something Kujan Sabani was talking about too, right? The data centers, if you think about where AI growth areas are next, really important. Guys, thank you so much. Busy afternoon. Of course, Bloomberg News earnings reporter Red Brown out there in New York City. Ryan Vlastelica in Chicago. He's Bloomberg News equities reporter. And this on a day when we are just awaiting that NVIDIA call to begin happening. I'm looking at NVIDIA
next couple
shares.
of minutes should start.
They're now down 0.8%.
Hey, we got to talk about the cash problem that NVIDIA has.
Too much cash?
Yeah, it's a good type of problem to have. $38.5 billion for its cash and cash equivalent reserves. They're just skyrocketing. Our own Ian King points out. That's from $18.3 billion a year earlier. Ian writes that NVIDIA's size means it's constrained in any acquisitions it could possibly do. Is it going to spark higher investor returns?
Could it possibly do a buyback? Like, what do you do with it, right? I mean, you've already got a stock that's up 200%. Are investors clamoring more? I don't know, but it's certainly something to think about. All right, guys, we're going to continue to certainly watch NVIDIA into the Thursday trade. It'll filter over to our conversations. We will be continuing from Schwab Impact here in San Francisco. Great lineup. We've got the investment team from Schwab looking at U.S. equities, global equities, fixed income. We got a lot more to come, and we're going to continue watching NVIDIA.
Stock is almost even in the after hours.
Don't go anywhere. Balance of Power starts now.